There is a specific number that quietly changes how people think, plan, and breathe. It's not $1 million. It's not generational wealth. It's not private jets or beachfront mansions. It's $100,000. For most people, reaching $100,000 is the moment money stops being only about survival and starts becoming a tool. That shift, more than the number itself, is what permanently alters a financial life. Before $100,000, money is reactive. Bills arrive and money responds. Emergencies dictate decisions. Fear shapes choices. After $100,000, something fundamentally different happens. You gain optionality. You gain leverage. And most importantly, you gain time. This is why people who cross this threshold rarely think about money the same way again. $100,000 is the first true safety buffer. The most immediate change $100,000 brings is psychological safety. Before this point, even small financial disruptions can cause anxiety. A medical bill, a car repair, a job loss, or a sudden move can spiral into months of stress. When you have $100,000 saved or invested, emergencies stop feeling catastrophic. They become manageable problems instead of life-altering events. This buffer does more than protect you from crises. It allows you to make better decisions. You stop choosing the cheapest option out of fear and start choosing the best option based on value. That alone changes long-term outcomes dramatically. The compounding effect finally becomes visible. Compounding is often described as magical, but before $100,000, it feels invisible. When your investments are small, growth feels slow and insignificant. A 5 or 10% return barely registers emotionally. After $100,000, compounding stops being theoretical and starts becoming tangible. A modest annual return suddenly produces thousands of dollars without additional effort. Your money begins to work harder than your labor. This is the point where wealth starts accelerating rather than crawling forward. Once people see this effect in action, their mindset shifts from earning money to deploying money strategically. Your relationship with risk changes. Before $100,000, risk feels dangerous. Losing money can mean losing stability. People in this phase avoid investing, entrepreneurship, or career moves because the downside feels unbearable. After $100,000, risk becomes calculated rather than terrifying. This doesn't mean reckless behavior. It means informed risk-taking. You can invest in yourself, start a business, switch careers, or negotiate harder because failure is no longer fatal. That freedom often leads to higher income, better opportunities, and exponential personal growth. You gain time freedom. Before financial freedom. True financial independence may require much more than $100,000, but time freedom begins much earlier. With a six-figure financial cushion, you are no longer desperate for every paycheck. You can say no. You can take breaks. You can wait for better opportunities instead of grabbing the first offer out of fear. This time flexibility reduces burnout, improves decision-making, and increases long-term earning potential. Ironically, people often earn more after reaching $100,000 because they stop making desperate choices. Debt loses its psychological power. Debt feels heavy when your savings are low. Even manageable loans can feel overwhelming when there's no buffer. With $100,000, debt transforms from an emotional burden into a strategic tool. You no longer fear monthly payments because you have reserves. You can choose whether to pay debt aggressively or invest instead. This shift removes stress and creates clarity. Financial decisions become rational instead of emotional, and that distinction alone can save tens of thousands of dollars over a lifetime. Your identity starts to shift. Money influences identity more than people admit. Before $100,000, many people unconsciously see themselves as bad with money or always behind. Reaching this milestone rewires that internal narrative. You start seeing yourself as capable, disciplined, and in control. That identity shift leads to better habits, stronger boundaries, and more intentional planning. People who cross $100,000 often continue building wealth not because they suddenly became smarter, but because they started believing they were capable. You stop chasing money and start using it. Before $100,000, money is chased. You pursue raises, overtime, side hustles, and survival income. After $100,000, money becomes a tool you deploy intentionally. You invest with purpose. You spend consciously. You plan long-term. Money shifts from being the goal to being the engine. This distinction separates people who stay stuck from people who build lasting wealth. The real power of $100,000 won't buy you a luxury lifestyle forever. It won't eliminate work. It won't guarantee happiness. What it does give you is control. Control over time. Control over choices. Control over your future trajectory. That control is what makes $100,000 life-changing. It's the line between reacting to life and designing it. If you're on the journey toward your first $100,000, know this. The struggle is normal, the progress is slow at first, and the payoff is real. Focus less on speed and more on consistency. The day you cross that line, your relationship with money will never be the same. If this breakdown helped reframe how you think about money, make sure to like, subscribe, and turn on notifications for more mindset-shifting financial content. Your future self will thank you.